Hello and welcome to another episode of Classroom. This is our continuing series on the election impact for markets. This time round, we're trying to tell you what the key concerns would be for the market, why a coalition government is necessarily a bad outcome for the market, and what it is that the market is most wary of in terms of policies or approach that a particular combination might have when they come to power, and that might in turn negatively impact the markets. My two guests today, Anand Tandon of BRICS and Rashesh Shah of Edelweiss. Gentlemen, good to have you both on the show. So Anand, is there a market experience with coalition governments? I mean, is there a clean parallel to draw over there?
Yes, there is, Mithali. If you look at it for the last 20 years plus, I mean, the last coalition that we had since 91, we've always had a coalition government. And even before that, there was an experiment once in 77, but that didn't work too well. But from 91 to now, we've had a coalition government all along. And interestingly, if you look at the economic growth that the country has witnessed, you will find that the trend changed significantly in the mid-80s, and that almost coincided with the formation of coalition government. So my contention would be, I don't think the market needs to be particularly worried with another coalition. It's a sideshow. The economic show continues separately.
I have a non-believer over here. Rashesh, you come in on this. Should the markets be nervous about the elections? What is it that's making it nervous?
I think all of us do accept that coalition is inevitable, because I think the way India's entire politics is evolving, I think we'll for quite some time always have to contend with a coalition government. However, I think the key thing from investors' point of view is it going to be a stable coalition, or is it going to be a very uncertain, wobbly coalition with a lot of infighting? So I think the hypothesis currently is that either Congress or BJP, if either of them can get to 145, 150 seats on their own, whoever reaches there first will be able to form a stable coalition. And stable coalition is important for the stock market point of view.
What is the line that is being drawn over there, Rashesh? Is it stability equals price performance equals larger policy action? Because, I mean, there's been a lot of talk about how markets generally rally before elections, etc., etc. That as well is tenuous logic, right?
Yeah, I think the only thing market wants is really not worry about the ideological stands that all the political parties will take in public, but the fact that decisions should get made, reforms should get, like if you see the last time there was an announcement for opening up FDI in insurance at least 3 years ago, and the government has not been able to execute on that. So if it is seen as a weak coalition which will not be able to execute, then the market will get concerned, especially in this kind of environment where growth has slowed down. There is, global instability is going to have its own effects on India. So we need a government that can act, and only a government that can act will be a government which at least has a steady as a steady coalition.
You want to comment on that? Is stability always equal to good policy action? Because as Rashesh just pointed out, we've had a combination in power for 5 years, but it hasn't necessarily meant there's been great policy ground has been broken.
I think, we have a framework of the bureaucracy which actually allows policies to continue. So irrespective of the rhetoric that each government may come in and say, there is actually a continuation of policies for the most part. Further, the policy itself actually may not have much to do with the market, because if you look at, for example, the last 3 or 4 years, as you point out, there was hardly any policy action. But we've had the biggest bull run for the first 4 years and the biggest bear market after that. And I don't think you can blame the existing government for either the bull market or the bear market. It's pretty much something which happened to them. We were just a silent participant.
Courtesy the government, right, Anand?
Right. So, by and large, you'd find that the policies remain somewhat, stable and continue for long periods of time. And, the markets themselves have a life of their own. So on either case, while stability is important from the perspective of reassuring people, so it's more psychological than anything in terms of actual investment flows, earnings, or fund flows.